What if you could find an investment analysis from 10 years ago and see how it actually played out? Well, today, that's exactly what we're doing. We are digging up a 2014 analysis on a small company called Shakti Pumps to figure out, once and for all, was it a hidden gem or was it a financial trap? Let's find out. So let's start right here with this quote from an investor back in 2014. Stress per share. I love that phrase. It just perfectly captures the vibe around Shakti Pumps a decade ago. You had a company that was promising the moon, but it was also, keeping investors up at night. The big question is, was all that stress worth it in the end? All right, let's set the scene. I want you to picture it. The year is 2014. An investor posts a really detailed breakdown on the Value Picker forum about a company that's got their attention. And that company is Shakti Pumps. So who was this company back then? Well, they were a pretty solid Indian pump manufacturer, doing around 300 crores in sales. The growth was there. 30% a year is nothing to sneeze at. But they weren't exactly firing on all cylinders, using only about half their production capacity. And here's the most important clue for our story. They had just launched a brand new, totally unproven product, solar pumps. Keep that in mind. Now you might be wondering, why pumps? Well, look at these numbers. The market was absolutely massive, and it was getting ready to explode. Just the Indian market was expected to grow over 60% in a few years, mostly driven by farming, and globally, even bigger. This was the giant prize that made investors willing to take a chance on a risky company like Shakti. So this brings us to the heart of the dilemma in 2014. On one hand, you've got these incredible promises of growth, but on the other hand, you had some really, really big red flags that were frankly pretty tough to ignore. First, let's look at the good stuff, the bull case. What was getting people so excited? What was the potential reward for all that stress per share? Okay, so the excitement really came down to a few things. First, that crazy 30% growth was just hard to argue with. But the real game changer, the thing that could change everything, was that solar pump opportunity. The government had just announced a huge subsidy program, basically creating a 1,500 crore market out of thin air. Shakti was one of the only companies ready to go. You could say this was the lottery ticket. But hey, for every reason to be excited, there was another reason to be nervous. So let's flip the coin and look at the bear case. All the red flags that were causing so much anxiety. And believe me, the worry list was long. The owners had pledged a ton of their own shares as collateral for loans. That's often a sign of financial trouble. Their working capital was through the roof, which means cash was always tied up. They weren't getting paid fast enough. The CEO gave himself a gigantic pay raise, and there were some kind of sketchy deals happening with other companies the promoters owned. Yeah, these are all classic corporate governance no-nos. And this table right here really puts one of the biggest problems in the spotlight. Just look at the working capital days. Shakti needed 157 days. That's over 5 months to turn its business operations into actual cash. A super efficient competitor like KSB Pumps, they only needed 60 days. This showed that even though Shakti was growing fast, it was burning through cash way, way less efficiently. So you had high growth fighting against high risk. Which one won? Well, let's hop in our time machine. Fast forward 10 years to 2024 and see what happened. The answer, in a word, solar. That little bet they made back in 2014, it became the single most important thing for the company's future. Government programs like PM-KUSUM, which were designed to help farmers get solar pumps, just completely changed the game for Shakti. And the results were just staggering. In the 2024-25 financial year, their profit after tax shot up by more than 188%. And it didn't stop there. Their EBITDA, which is a really good measure of a company's core profitability, jumped by over 168%. This wasn't just growth, folks. This was an explosion. So where did all this growth come from? Well, this chart makes it pretty clear. A whopping 77% of their business now comes from government projects, almost all of it driven by that solar pump scheme. The company had totally reinvented itself. Okay, time to play detective. Let's revisit those big red flags from 2014. Now that we have 10 years of data, we can finally deliver the verdict on each one. Remember how worried everyone was about their debt? Back in 2014, their debt-to-equity ratio was 0.7. A decade later, it's down to a super healthy 0.14. So what does this tell us? They took that solar windfall and used it to fix the exact problems that scared investors away. Verdict on this one? Problem solved. And what about that whole mess with their working capital? Well, the 2024 report doesn't give us the exact days number, but another important metric, the current ratio, is at 2.27. In simple terms, that means they have more than $2 in assets for every $1 of bills they have to pay soon. It's a huge sign that their financial management has gotten way, way better. I mean, just look at this side by side. The transformation is absolutely stunning. Turnover grew by more than 8 times. Their profit margin almost doubled. And they got that debt completely under control. This is a night and day difference from the company we were looking at back in 2014. So, after solving the mysteries of the past, what does Shakti Pumps actually look like today? It's a totally different animal. Today, Shakti is a leader in the solar pump industry. They've really professionalized, focusing on all the things that were worries back in 2014, like governance and R&D. But their incredible success has created a brand new risk, that massive reliance on government policy. The whole game has changed. And that really brings us to our final thought. 10 years ago, the question was all about whether a risky company with some governance issues could actually pull it off. The answer was a huge, resounding yes. But today, the question is totally different. Now that they're a market leader whose fate is tied to government policy, what new challenges and opportunities will define their next decade? The story, my friends, is far from over.